What's going on, guys? We're going to talk about the Nasdaq 100 and how we should specifically be approaching it for the month and the remainder of February. Before we get into the actual chart work and my opinion and some technical analysis, if you guys need Apex evaluations, 80% off if you use code DAnthony right now. That link is down in the description box below. Now, what we're looking at here is the daily time frame on the Nasdaq, and to be honest, it's not the best looking chart. Realistically, if we kind of go back in time to literally the start of the year, going back to the first week of January, we've essentially gone nowhere. You kind of push down, you push back up, we come right back down, we push back up, we push right back down, we push right back up. Now, we can realistically say that there is a move, there is some bullish context because we are kind of holding the upper half of this range. But until that narrative kind of changes, until we get over 22,000 and we actually start to, close on a daily candle over 22,000, you have to just kind of to be honest, you have to give the sellers the benefit of the doubt, because a lot of times traders will get into a position and they're going to think, this is the time we're going to break out, and then you see a significant pullback. Now, with a lot of stuff going on, especially with the new administration, and you're having a lot of Fed members speak almost what seems like on a daily basis. You have Trump talking almost what seems like on a daily basis. You have things that are getting implemented almost what seems like a daily basis. That's what's making the market a little bit more hesitant to kind of choose a side. So until a lot of this stuff starts to, I guess, smooth out and there's some time behind it, then and only then you're going to see some breakout moves. Now, I want to give you guys some levels that I'm looking at both to the upside and to the downside that you guys can focus on. What I'm doing here is I'm running kind of major supply and demand zones on a 4-hour time frame. We can realistically look at the daily time frame as well, but going all the way back into the last week of December. So for over a month's worth of data, we've essentially gone sideways. We're essentially in a range between 20,600 and 22,000. Okay, big range. There's definitely little intermediate levels along the inside of this bigger range. Right now, we're kind of consolidating. If I was to draw a daily flag pattern here, you're going to see a clear breakout. I want to get 2 touch points on this. We're going to have a clear breakout here to the upside over a price of 21,886. Now, how much we can expect to the upside is going to kind of be dependent on what the market wants to do. As of right now, I'm not really looking for a breakout all the way to 22,000. If we start to break out above 21,850, I'll look for a move into 21,950. 100-point move here, targeting this high wick from February the 7th. Okay, that's the trade I got. That's the range that I would be looking to play. To the downside, if we start to move and we start to break below 21,769, I would play that into 21,668. So we're looking at around 100 points to the downside. What does that tell you? Well, we're 50-50 smack dab in the middle, from potentially a 100-point move to the upside, potentially a 100-point move to the downside. I want to stay on the side that breaks out. So if we break out to the long side, I want to stay looking for long trades until we test 21,950, 960. If we break 21,769, I want to stay short until we test 21,670. I'm not going to talk about 22,000. I'm not going to talk about, potentially coming all the way back down to 20,000. I want to see this little intermediate range get tested and get confirmed. Something's got to happen here. And I don't want to start looking too far ahead of myself until we at least confirm to the top side or confirm to the downside here, because this range could play out for the remainder of February. We could kind of break back out to the top side and then pull back down to 21,000 and then kind of just continue this wave pattern of up and downness. So I think what we need to do as traders is we need to approach every day, day by day. I think we need to take less trades, maybe look for a better setup in terms of the strategies that we're using. Maybe if you use, 4 or 5 different strategies, maybe just go with one strategy and try to find that picture perfect A+ setup according to you. Take that trade. If it wins, walk away on the day. If it loses, walk away on the day, and just kind of slow the whole process down for the remainder of February, or until we start to clearly break out of 22,000 and start testing 22,450, or we clearly start to break down below 20,600. Okay, that's how I want to approach it. Just want to give you guys a little market update on how I'm going to approach the rest of February. With that being said, like, comment, and subscribe. If you guys want to join the Discord community, access to the course, link down in the description box below. If you guys need Apex evaluations, use code DAnthony at checkout. You're going to save 80% off on those evaluations. I'll see everyone in the next video.